Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful. And roll top wire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you gotta get spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Well, it's Friday. We don't have anything too big today. Let's get some music on there. But I think that we might still have an interesting session here in the Treasuries. So I don't think that I'm going to be taking any trades today just because I don't have any kind of information that suggests it should go one way or the other. But we have had a little bit of a tug of war, so we'll see where they decide to go and balance today. We want to pay attention and see what they end up doing here in this situation. If the yields continue to rise because of Federal Reserve messaging, or if they kind of settle somewhere in here because of the suggestion that the inflation is peaking. So coming over to the chart, let's just kind of look at the overnight action here. Oh, by the way, I've been having this problem. Yeah, I don't know. I get this thing where it's like, hey, I can't pull market data for the 10-year. I don't know where it's coming from. I think this is the only chart I have that has a 10-year. So I'm going to close that chart and we'll see if it goes away next time it starts up. Anyways, 10-year here. So you can see pretty strong move down. I got off somewhere around here, took a little bit further of a slip, and then there was the auction. After the auction, they took another sweep much lower. So yeah, I guess I missed out on a lot, but I wasn't going to hold that one all day. So I'm not going to worry about that too much. But just that was a pretty big move. Of course, there's still plenty of downside here on us, right? Because we haven't really wiped this bit out, right? S&P 500, they had a really good push initially, but as the yields started to get higher, they tumbled, and a lot of people were pointing out that there was like a critical 50% retracement from the all-time highs to the lows of this. That they failed. So we'll see about that. I still see in the flows a lot of volume yet to come. So I think we could still see some upside here this month in the equities yet to come. Oil taking a little bit hit. They did good yesterday though. Natural gas, well, that's there's some volatility in natural gas, let's say. Gold and silver just kind of going sideways here. Copper taking a hit. Don't like it when I see copper take a hit like that. And we can come over here and see the dollar strengthening a little bit. And Bitcoin, well, they went above 2,400, but that's, well, you got a head and shoulders pattern here that they might be paying attention to, but I don't think it really matters too much. They're gonna watch the currency flows. If we see money come back into the dollar over the weekend, that could be harmful to Bitcoin, right? So that's where we're at. How are you guys doing today? Man, so you know what? I'm telling you, the view numbers that we get on YouTube, they're not accurate. Because yesterday it was like telling us, oh, we had like 8 viewers. We got 8 viewers at like the very, very beginning. And I started the stream like super late. So what's with that? But I appreciate it, guys. Hit that like button. Helps the channel out. Back over to here. So the initial move here off of the open in the first 10 minutes or so in the Treasuries has been down, but that is a retracement of a little bit of upside action that they had. So what's Rand saying here? Oh, I didn't know that they have a Discord over on Axia now. Wow. Okay, Brand says the probability is increasing daily that 2-year yields test yearly highs at 3.42. Given effective funds rate is expected to be at 3.25 by the end of 2023. I'm not sure that it will be 3.25, but okay. This 2-year yield has some serious upside before the end of 2023. Given how strong the correlation is between yields and equities, it feels like only a matter of time before risk rolls over again. Tick tock, tick tock. Well, maybe, but I mean, I think these flows are still going to come through. Like at some point, equities could pivot really hard to the downside, right? But at the moment, there is still a lot of equity flows appearing to come through and puking and pushing this further. So, you know, it's just, but this would be one where it's like, you know, if you get one day where it turns, and then it'd be worth doing a swing. Okay. Coming through Twitter here, seeing if there's anything else interesting. Michael Burry is concerned about the amount of debt people are taking out. There's really not a ton of volume going through in the treasuries, and note that the liquidity is not as good today either. And we don't have anything. Do we have anything significant later on? Oh, we do get University of Michigan consumer sentiment. We did have U.S. import prices too. Oh, I don't know. Now I'm just seeing Paul's comments here. Would the import-export numbers have an effect in the current day flow? So, my take on import prices, export prices, and really anything having to do with imports and exports, those are important numbers, especially for the currencies, but the market doesn't seem to react to them. And I think that may be primarily because, one, they don't seem to really affect equities directly, and two, like, it's complicated, like how do people calculate out how much that matters to the prices of their things. So it doesn't tend to be something that you can really like trade as a catalyst. Now the University of Michigan sentiment, that is a number. I mean, those inflation expectations numbers, if they're in line, how is that? 5-year inflation preliminary 2.8, they're expecting 2.8, and 1 year they're expecting 5.1. So if that number came in and it was more like 5.56, that could move things. But I'm a little bit, I feel a little weary, like the rates in particular. There's been a lot of stuff going on this week, and I don't know, consumers' sentiment, inflation expectations is a really critical component of Federal Reserve right now, of course. But unless it's wildly out of line with the expectations, I think that everything else that's gone on this week is more important. And so it may just be that the Treasuries kind of end up being lackadaisical about it. You know what I mean? So the whole thing is we're looking for orders, right? And on a Friday, the sorts of things that you're going to be looking for is like people closing positions or setting themselves up to be safe for the weekend. So that often plays a bigger role in the dollar, right? And just kind of seeing how they end the week is another part of it. But when you're a speculator, sometimes it's hard to sort those things out, and you don't really have clear idea of where things are going. And so oftentimes on Fridays, you get these kind of inexplicable moves, or you get these days where it just kind of like middles and goes nowhere, because you don't get a lot of volume from the speculators. So that's why I say that unless the University of Michigan number, there's a significant deviation from the estimate on the inflation expectations, I'm not too sure we're going to see anything too interesting in the Treasuries. But I could be dead wrong. We've moved so much this week that, you get that divergence a lot, where it's like it's gonna do nothing, or it's gonna do a ton, right? Where are you seeing the inflation expectations? Oh, I see them on Financial Juice. Even if you don't have an account, I think you will be able to see those estimates. So I'll just read through the numbers here again. University of Michigan sentiment preliminary 52.5, expectations 48.5, conditions 57.8, 5-year inflation 2.8, 1-year inflation 5.1. Good morning, Jake. Where do you look, Paul? I think even on Forex Factory it should have that stuff, although it might not have all of the sub numbers. Yeah. On Forex Factory, it just shows me the two headline ones. Consumer sentiment. Oh, no, wait, they have inflation expectations too. Well, I did not eat very much this morning because I was expecting to eat a croissant, and the kids ate them all. So I have a muffin here that I'm gonna eat. Oh, is it blank for the expectations? Oh, on the forecast? Yeah. They do that a lot on, that number normally wouldn't have a estimate typically. And so I'm going to bet that people using like certain services, there's like data services that give the consensus, and that service probably just doesn't provide a consensus. But I think that these guys might do it by hand now that inflation expectations is a significant thing, because 3 months ago I wouldn't have seen an estimate here on Financial Juice either. So it's just kind of a new thing, because remember last Fed meeting, or was it in the June Fed meeting, when they did a 75 basis point hike, and they said, well, why did you do that? And they said, well, it was the inflation expectations number that really scared us. So that's why it's a big thing now, the last 2 months. So see how they have an opportunity to hit at 08, but nobody's doing it. I think that we could continue to see some downtrend, but the participation level here in the Treasuries right now is not very high, is it? It's very, very quiet. And I'm seeing the same thing in the SPOOs. Like right now, Alice is giving me 3,500. It's not very good numbers. Okay, so there was a stop run after that. They did trade a few hundred contracts at each level now. A little bit more volume at 06 half. So that break did seem to catch people's interest. We'll see if they continue to push down or not. That could be a sort of thing where it could halt and pull back up because of that. It's quite enough though that really could do just about anything. Or rather, I should say the liquidity is very, very light. The overall activity is low. And so if you do see more markets selling in here, it'd be very easy for them to push things to the lows or for buyers to come up and smack it up to the highs. So we kind of got to be careful. Some evidence, though, that there is a large meta order sell. And that's kind of been the theme this week, right? Is they're going off of the Federal Reserve saying we're going to continue to be aggressive. And I think that we got Brannigan, for instance, saying that they think 2 years should get to 3.5. I'm not too sure about that one, though. Right now we're at 3.25. Base case is September, we get a 50 basis point hike. So if we got another 50 basis point hike in November, then that would be 3.25, right? But if they only do a 25 basis point hike in November, which is also a strong possibility, I think. Let's see what the Fed Watch says. Let's come over here to Fed Watch. Okay, well, so right now, it looks like the market agrees with me that it'll be 50 basis point hike in September. Like if we come to September, see, most of them think 3.25, current date at least. And then when we come into November, most of them are at 3.25. So that would be another one hike. But then market also does seem to think that they'll do another one. So maybe Brannigan's right and the 3.25 is a real possibility. I also wonder which way this spread is going to go. As right now, it's kind of looking like a flattener. So I don't really like this location as it's kind of looking like it's going to break out. This is either a really great place to take a trade or a really bad place to take a trade. But maybe if they come back up there, I might take a swing. Does look like something might be happening in the 2s and 10s as well. I'm not seeing it in the nub. And wow, and look at that. Really strong offers above us in the 10-year. Well, the offers that they had did not hold at all. They all pulled when they came up to them. We're back up to 08. I don't know. I know I said, hey, maybe if they come back to 08, I might take it. But doesn't feel right to me. With a little bit of flattening. It's one of the things that I'm a little... You would think that the short end would be pushing the most. Let's reset things so that we can try and track it a little bit better. We'll watch these bids and see if the bids in the 2-year move up faster. Up. I mean, 2.875 would be fair. If I were to take a trade on this, it would be largely sentiment and continuation of the previous 2 days, right? I don't know if that's enough for me to take a hit there or not. I feel a little uncertain, so I think I'm gonna sit on my hands. If you know, they had traded up through those big lots, but there had been a lot of absorption on them, I might have felt a little bit better about it. But the way that it's trading at the moment is just kind of like, well, that could go anywhere, right? Yeah, there you go. John Fold. Okay, we haven't talked. This is not my full-time job. I do not recommend making this your full-time job, folks. Anybody that's telling you to make this your full-time job is scamming you, probably. Seriously. Because even the very, very best top-of-the-line traders don't make money every month or every year. Can you weather a year of losing money? Yeah. The only people that are doing this as full-time jobs are people at institutions that can't talk to you. Trevor says, I do this as a full-time job. It's like poker or playing chess for me. I'm not saying that people won't try. I'm just saying I wouldn't recommend it. Prove it. I tell you what, I've met a lot of people that claim that they do this full time. And then when I come in and I really look at it, I find out that they haven't actually really been doing it for all that long, or they do have other sources of income that they just don't really talk about. So think of this, guys. Listen, they really, I'm telling you, listen. Here's what's going on here is there's some influencer or whatever constantly comes in and asks, do you do this as a full-time job? Because they think that is some sort of knock against me. They say, oh, ask him if he does it full-time, because obviously if he was so good, he would be doing it full-time, right? No. Listen. All these guys out there, they're like influencers and traders, and especially the guys that are claiming to be like these big shot gurus that you should spend thousands of dollars learning from. Guess what? They don't do it full time. They're educators, they're influencers, they're taking money from you. And they're living off of that. And a lot of the time, especially when you have like these courses that are like $1,000 a pop, right? You only got to get like 6 to 10 people a month to do that, and you live off of that easy, right? So they're not doing it full time. Okay. That's what's really going on here. Now consider, what would you actually need? How much money would you actually need to make this a full-time gig, right? Well, consider that top of the line hedge funds pull in 20% per year. And that is like when you have a really, that's when you have like a really well-defined edge in that particular market, right? And you're like top performance, you'd make 20%, right? Okay. So if you had $100,000 stacked away, okay, and you traded on it full time for a year, you are likely to make $20,000 off of it. And that's if you're one of the best. Think about that. Do you have $100,000 in the bank to trade that you could potentially lose trading, or that you're willing to put at risk? I don't have $100,000 that I'm willing to put at risk, right? And that would only put you at minimum wage. That would only put you at minimum wage. Okay, maybe if you already had $1 million, but where did you get $1 million from? I'm telling you, this idea that educators and influencers put forth that you're going to make this a career, it's total bullshit. It's total bullshit. And what you're likely to do if you come in here and you say, I've got to work hard, I've got to, catch big winners so that I can live off of this, what you're going to do is you're going to overtrade, you're going to take on too much risk, and you're going to blow yourself up. That's what happens. There you go. You can make money from that, but when you realize that you make more money with less risk selling education, now, of course, you change your focus. There you go. Yeah, retail trading is fees-based. Charge them for data, charge them for education, charge them for active trading licenses, and charge them commissions. Yeah, that's how brokers and so forth make the money, right? What if you have a CS background that you got and set it and forget system? Could you maintain that over the weekends? Okay, so here's the thing. There certainly can be opportunities in algorithmic trading, right? But a lot, the money that like these big quant firms are making, you got to realize that a lot of the things that they're doing are things that you as a retail trader can't do. Like, you likely don't even have the data to even play in the arenas that they're talking about. And a lot of their advantage comes from having a really, really large portfolio and managing a really large, highly diversified cross-section of assets and derivatives, right? And so it's possible that you as a retail trader can come in and find some pattern on a single asset that, you can trade. I think that's kind of the idea, right? That people have in their head is, I'm going to come and I'm just going to study the 10-year treasury really hard, and I'm going to find a pattern in it that happens regularly, and I'm going to code a robot that takes advantage of it, and then I can just sit back and watch the robot trade, and I'll continually make money. That's like 1 in a million chances that you can find that. Markets are more statistically efficient than they are informationally efficient. So it's going to be a lot of work. It's going to be really, really hard for you to find an edge like that. Highly unlikely to happen. You stand a much better chance coming in and understanding the market and following the news and trading informational inefficiency instead. You see, when I come in and I there's edge out there only retail can take advantage of, maybe, but listen, guys, I love trading. I made this channel to help other people that love trading, right? And my goal is to help as many people as possible to understand the way that the market works and to help make the market more efficient, right? So I'm here to help you be as successful as possible is the end result of all of that, all right? And I just know from the way that the statistics are and what is likely to happen and everything, that the whole I'm going to make this my full-time job thing is a pipe dream. It doesn't happen. The way that trading educators tell you, okay? And I'm telling you this because I don't want you to take excessive risk and blow yourself up, right? What I would like is for you to come in and trade minimal risk and get really, really good. And eventually have a shot at making a really big trade someday when the opportunity presents itself, right? But you're not going to do that if you come in right away and just start blowing everything that you have, right? I was like, you can come in and you can trade micro lots, and you could trade micro treasury futures for years on a relatively small account and get really good over the course of years, right? Whereas what everybody tries to do is they come in and start trading micro ES and using multiple contracts and trying to grow a 1K account into a 100K account, and what eventually happens is they blow the account, right? I don't want you to do that. I don't want you to blow the account. There you go. Trading is supplemental income. Yep. And big time trading is for people that already have a lot of money to risk, right? It's like if you're already a multimillionaire, then go for it. You probably could make trading your full-time gig, but if you're already a multimillionaire, why would you want to make trading your full-time gig? That doesn't really make much sense, does it? Well, I was really nervous about trying to take a trade when it came down in here. And of course they came all the way back up, so I made the right choice. Yeah, well, like that's the other thing is if you really had $1 million, why wouldn't you just put it in stocks and live off of that at that point, you know? Yeah. Well, I mean, here's what happens though, is you might have 1 million people trade and one person ends up being massively successful from it, and then everybody writes books about him, and he's on all the YouTube channels, and they interview him on CNBC and all of these sorts of things, and they say, see, look, you can make a living from day trading. And the reality is that if you had a million monkeys come out and trade it, at least one of them would come out with huge profits, right? Are we going to come in and you know, because a monkey did it, that must mean that you can do it? Yeah, okay. It's funny when you think about our generation in retail trading. Reddit brains thirsty to figure all the things out. The world's most complicated puzzle is basically correct. It's not for 90% of people. That's the sad part of it. Not everybody can do it. Well, yeah. I mean, this is why, again, there's two things that, or well, not two things. There's one thing that about the nature of markets that really explains so much about the way that markets work, and people don't like to hear it because it really dashes a lot of their hopes and dreams. The market is more statistically efficient than it is informationally efficient. So like Uzi's talking about, you got all of these Reddit people trying to figure it out because they think that there's this pattern that they're gonna find. And the reality of the market is they find a pattern, they trade it, and that removes it from the market. And your orders have so much impact, it's very easy to remove that from the market. If you're just a retail trader, you find a good strategy and you size up. Within a year, you will size up large enough that you'll completely eliminate the edge and possibly destroy it. And I've seen people do that before. I think that there was at least one or two times where I did that myself. Okay. Now, having a YouTube channel probably doesn't help with that, right? Meanwhile, there's all this informational inefficiency everywhere. You know, large institutions can move price very far away from fundamental value. The market doesn't always reflect fundamental value, and there can be information out there that the market just like isn't actively trading on yet, and you just kind of got to wait for the right catalyst for that particular flow to start coming through, and you can see it, know about it ahead of time, see it when it's starting to come through, and just write it, right? And so what makes you as a person suitable for day trading? You like reading the news, you like doing all of the financial analysis, you like reading the analyst reports and figuring out what the flows are likely to be and that sort of a thing. You enjoy the markets and you want to understand the market itself, not pattern recognition, right? That's the thing that's going to make you a successful trader. The people that are good at this are the ones that are good at keeping up with the market and always understanding it, right? Because your performance as a discretionary trader is going to be largely down to how well you understand that market. Sentiment will always kind of work because if everyone bullish, everyone have already bought and the stock will go down eventually. Yeah, I think that sentiment will always be a opportunity to trade. I mean, you're going to have to, because there's so many other things. So here's one of the other problems with like a pattern per se. And let's just say, okay, sentiment isn't necessarily a pattern because when you're using sentiment, you're using information from outside of the market. Now, figuring out what that sentiment is a little bit harder to figure out sometimes. Okay. But there's, people have found ways to do it through like social media and stuff like that. Right. Okay. But the problem with it, if you were trading on just that, is that there are so many other things that can come in and ruin that trade. Right. So you still kind of have to know everything that's going on, essentially. Or as much as you can. Good example was on Wednesday. I had a really, really great runner. And I had made the right call off of the CPI and I was able to trade it faster than other people. And, you know, there could be situations where you can trade the sentiment faster than other people, so you'll be able to take advantage of it. But then what happened? Something else came along, and there was comments by Fed speakers and newspaper, and I wasn't, you know, very nimble during those times, and I wasn't as aware of what those were going on, and these other flows came in and killed the trade. So $100 trade disappeared. Had to scratch it, right? So you've got to keep track of everything that you can. Order flow plus discretionary intuition, knowing where to enter a trade is good risk management works. Yeah, well, those are all the three parts that you would need, right? But that's still in line with what I'm saying, right? Is you need to be able to predict future orders, and you need to understand the current conditions. If you have those two things together, and you utilize sound risk management, then you can do really well. And I got to tell you guys, when you're doing really well, it's something else. This past 2 weeks, I felt like I'm Neo, man. It's like I can see what's going on, and I know what it's going to do before it happens, and it's just like everything seems to work for the most part, right? It's so much easier than trading the noise, man. Like when I get into that mode, one of the things that constantly goes through my head is like, why did I waste all my time on technicals? I haven't done back testing in a while. A lot of that is because I really want to get into machine learning, but I just realized that putting my learning into other things was so much more valuable than trying to find something in, like, you know, moving averages and oscillations and stuff like that, price action setups, whatever it is. Yeah, bookmap is okay. I really don't think there's any better way to watch the order flow than to look at the DOM. The charts are really cool looking, but they're just duplicating what you can see on the DOM, and there are some things that are really important that they don't show very well, that the Vista charts don't show very well. Because the thing that I care about the most is what are the latent liquidity conditions, right? Not just the resting liquidity. And those charts you don't really get that kind of feel the way that you do from watching every tick. I always remember that guy from that pit trading documentary about pit guys moving to electronic trading. I can't beat the computer. I just can't beat. Yeah. Well, because a lot of those guys were using the market making strategies that the robots took away from them. Even the footprint, I just don't think that they show it. So the issue is this, okay? If we trade up, how many contracts does it take to trade up? If we come back down again, how many contracts does it take to trade up again? Right? Okay, 127, 718. There's definitely some buying in here, right? Yeah, you wouldn't see that on your Vista chart. I don't think that would be enough to make a bubble show up, right? And this might trade back down again, and then it could come up, but you could see that, hey, every time that they put an offer out, it's only like 144 at a time, and every time that they put a bid out, it's like 800 at a time. Right? That's telling you something about the latent liquidity conditions. And when I say latent, I mean like the orders are out there waiting, but you can't actually see them. They don't actually place the limit orders until it starts to trade because they want to hide their intentions, right? So you need to see the latent liquidity conditions. One of the most clear indications that you will get or kind of setups that you will get in the latent liquidity conditions is a situation where there just isn't very much latent liquidity, where they're only putting up like 50 lots, and it just goes back and forth like that forever. And the Vista charts definitely don't show you that. You get what I mean? Footprint is, well, not necessarily. The vast majority of the methods that people use on a footprints is technical analysis, yes. So understanding the current liquidity conditions is not technical analysis. Trying to use the current market data to predict which way it's going to go, that's technical analysis, right? But if you understand the current liquidity conditions and you know you have a predictor of order flow, that's not technical analysis, and that's something that can give you a good trade, right? In other words, in the community, in order to teach people in the community effective trading methods, we really need to divorce the tools from the methods, because there are a lot of really good tools out there that people have abused. Order flow is probably one of the biggest ones, and it was not intentional by the people that did it at all. It's just like you come out and you're an educator, you know, like No BS day trading. This is a perfect example. So he comes in and he says, look, here are the different patterns that you're going to see in the DOM, right? And how you can potentially play them. And you'll notice that on his trades that he has both ways. He's like, here's the one where you catch the edge, but here's the one where you've they're luring you, right? Same order flow situation, different outcomes. How do you know which one it's going to be? Predictors of order flow, right? He doesn't have that term. He says context, right? So what happened was he came out and he taught us all, you know, the things that you're going to see in the order book so that you can understand what's going on. And people turned it into technical analysis, right? And it wasn't his fault. It's not his fault at all. That's just like people's natural tendency. Can you explain the difference between liquidity conditions and price action? Okay, so liquidity conditions is basically, what I mean by that is, what do the limit orders look like? How many orders is it going to take to move us? So I have over here on this other chart, I do this for the S&P 500. I should probably put one on the Treasury too, but this data series down on the bottom is an indication of current liquidity conditions, because it's telling me how much is needed to like actually move it, how much opportunity actually is there. So the higher this number is, the more opportunity there potentially is, the more size you could trade based on the current liquidity conditions. That's what that means, right? Does that mean that it's going to go up or down? No. But it does tell me, if I have something that tells me it's going to go up or down, I can get an idea of how far up or down it's going to go, right? That's what I mean by liquidity conditions. I look up on here, okay, they're trading 2,000 lots going into the highs, right? Oh, it says expired again? You tried that just today, Sharp and Goose? Because they already fixed that once. That's so funny. I think people no, because no, I think that's okay. I'm gonna have to ask Jigsaw about it again. I'll ping Peter. I'll open another it's like only one person can get it, and then the next time that it does it again, it starts denying them, I think. I'll have to do it after the stream. Okay. So again, past data does not predict future data very well. Now there's a couple of things where we can kind of make some degree of a prediction, but it's not a very good prediction on a statistical basis, right? Like I can come in and I can say, okay, so volatility tends to cluster, right? So I can use past volatility to make a pretty good estimate of what volatility is going to be like today, right? I can make a very good estimate of what volatility is going to be like today. But when that estimate is wrong, it's going to be like really, really wrong. Okay. Past data doesn't tell you. So you're still, when you say reaction trading, all you're saying is you need to wait for some sort of technical signal that predicts which way it's going to go. And I'm just telling you that anything that you look at that's generated by the market is not very effective at predicting what's going to happen, because there's so many other reasons that people will trade, right? You get what I'm saying? So like even if there was a thing, like for instance, a break of the high. Great example, okay? We break the regular session high, you're likely to see some stops. I think we're probably a pretty good chance that we're going to get to 16, for instance, right? But that's not the only thing that's out there, okay? What if a Fed speaker comes out right now and says, hey, interest rates need to go a lot higher? I think that we could be at 4% by the end of the year. Or what if Jerome Powell said that? What if Jerome Powell came out and said, hey, it could be 4% by the end of the year, right? That trade's not going to work out. Okay, but the number of things out there that are like that could completely wash that trade out, there's so many of them that this trade ends up being statistically noise. You can't differentiate it from the other stuff because the other stuff ends up being so much more important because they drive much more flow than retail traders stopping out at new highs. You get what I'm saying? So you want to have predictors of order flow, and the more order flow that thing is predicting, the better, right? And people trading off of because price did X is just minuscule compared to almost everything else out there that drives order flow. Do you understand my case? I think we need to stop doing predictions and start just... No, but you do want to make predictions. You want to predict the order flow. Just stop trying to make predictions based off of the past price. What you want to do is you want to say, okay, I think that there's going to be selling in the treasuries because the Federal Reserve wants interest rates to be higher, and the 2-year should probably be at 2.5, and there's going to be continued selling order flow here, right? And then I'm waiting, and I'm looking for, okay, are we actually getting selling? And did you see how I played it in here? So in this case, okay, it came down. When it broke 08, it really dropped. Okay. But when that happens, I didn't take the trade. Why not? Because it wasn't enough for me to be sure that there was a large meta order being executed short. That was just like a stop run, and the amount of volume that it took for them to get there wasn't very much. And I wasn't getting any indication from like the actual liquidity and like absorption on one side or whatever that there was actually like a strong meta order out there. So I said, no, this is just too slippery of a market. I'm just not going to take it. And now it's gone completely the other way. Now, I think I could probably say on just a technical basis, okay, maybe buy 14.5. It's not really doing the level break setup here, but it's a 50-50 anyways. I might be able to buy 14.5, sell 16, right? Yeah. Okay. But just a small thing. Okay. But I don't really know. I don't really have a strong reason to see why they're buying it today. And in fact, the order flow that we're seeing here to the highs isn't very much. So Is it really a good trade? Let's try it and see what happens. You see if we'll get it or not, because this is really kind of more of a, I don't really have a strong predictor of order flow right now to tell me that you should go long. Right? A little bit skeptical of the upside here, to be honest with you. So what they do is they get just far enough where any retail trader sitting and looking at this has a hard time sitting still and not putting an order in, and then they'll flip it. You know? Yeah, they do order flow. You just gotta remember to not turn order flow into technical analysis, right? You can use order flow to kind of tilt things to your advantage. That's for sure. It's just that. So here's another thing about order flow, is that like order flow at its base level, like order flow as like it initially started, was a very profitable way of trading, and there's proven edge in it. And it's all purely technical edge too. It's just that there's too much competition for us to make money from that alone. That doesn't mean that we don't want to still incorporate it into our trading. So when I'm talking about that part, I'm talking more about, am I seeing icebergs situations to try and catch the edge, right? So if I combine that with a predictor of order flow, that can kind of tilt things in my favor a little bit too. Because if I can catch it and with the ability to scratch out immediately, that's a big advantage to me, right? Or vice versa, you know, we can take advantage of the risk management in that way too. If I can come in and take a few small trades here and then use that to give myself more room to let the thing that I want to have happen, that's to my advantage, right? That's me using. So there are kind of like technical statistical things that I can take advantage of. Is just never make the mistake that because price or volume did this, that it means that this is going to happen, because that never works. In the long run, it's a fallacy. And there's about 20 main big reasons why that doesn't work. There's been a decent amount of absorption at 14, so we might have a good level break set up here. Let's see. He says it works, it's just saying. Really, it doesn't, though. Listen, if I had convincing statistical data that suggested that a certain way of doing things worked, then I'd be all over it, right? The problem is just that I know too much, really, is what it comes down to. Is most retail traders, they come in and they have a really naive understanding of statistics, and so they can kind of fall into some of these fallacies really easily. I never had such illusions. So I came in and I started doing the back testing right away, and I very quickly realized that all of those things don't work. You can buy, well, you could potentially make money from it, but I almost guarantee you that over 1 million trades that you're going to lose money. See, not like I say that, I don't, because I don't want to like insult you guys, but Oh, it's profitable for me? Okay. Do you have 10,000 trades? You get what I mean? Like, there's a lot of problems with this. So number one, you need a really large sample size to see some of the statistical problems that come into play here. And I really mean like a really large sample size. And number two, because you're doing it discretionarily, it's hard for us to sort out what you're actually using and what is the actual technical inefficiency that you're really taking advantage of, if any. Right? It could be that you're actually using fundamental analysis more than you realize. It could be that it's just luck. I think that you can't be sure that it does not work. That's not the way that the science works, right? The null hypothesis is that it does not work, right? You can't disprove the null hypothesis. But you can't prove that the opposite is true either. I think though that's why, again, this more recent research that we have from the markets is a really effective answer to this question, right? Because what we found is market is very statistically efficient, but not very informationally efficient. Why? Because orders have strong impact, right? Now what does that mean? That means that TA could work if you found the right signal, but it's really hard to find the right signal. Really hard to find the right signal. That's what it basically means, right? Is that technical analysis can work, but it's really hard to find a correct signal, and you're not going to find it from people online. Okay, so Sharp and Goose, I think I know the study that you're talking about, and the problem that I have with that study is that what they were talking about with support and resistance was on super tiny time frames. Yeah. Maybe you can find it again and we can verify that we're talking about the same one. But somebody one time said, "Oh yeah, I found a study that says support and resistance works." And I remember it saying that too, that it was like, well, it seemed to work on equities but not other things. But it was on short time frames. And their takeaway from it wasn't necessarily that support and resistance works so much as it was that in equities you could see the block orders on really short time frames because of that sort of thing. Hey, that worked out really well, actually. Too bad the other contract didn't get filled. I'll go a step further. In all of my back testing of price action setups and support and resistance setups, anytime that I found something that made it appear that a particular level had some sort of significance, it turned out that it just made that location more noisy. So I would do these things where it was like, okay, if I got a double bottom, then I want to go long, for instance. And what I found is that there was a statistical edge if my stop was twice as far as the current price back to that double bottom. Does that make sense? So like, oh, I don't have my pen turned on. Man, now you're listing crazy things I've never heard of before. Okay, let's look up the thing. Oh, this is a different one. I think this is a different one at least. They're doing a rolling window approach. Yeah, Epic Pen is a pretty well done program. Yeah, no, I'll show you. So I was gonna draw you a picture here. So what I found in my research of price action setups was that, like, if you had a double bottom, first you have to kind of have some way of confirming that a double bottom happened, right? Because you can't, like, it has to come back a certain amount first for you to have confirmed that a double bottom has happened. So we could say that here at this point right here, a double bottom has happened and we can take a trade. And that trade worked if and only if the stop was twice this right here. In other words, when you had a double bottom like that, it was actually very likely to get touched again. That makes sense. So it was like the existence of a level mattering actually just makes more noise around that price level because of all the people trying to trade it. Well, you might be able to. So the issue with it is that you can come in and you can say, okay, I do want to go long in here, and I will be able to make money from trading the noise in this area over and over again. But when you're in a market where that doesn't work, it like fails over and over and over again. So it basically, when you get into a trending market, you'll see this and it will fail multiple times in a row. So it's fat tails, right? You can pull stuff out of the middle, but in the long run, it doesn't actually work. Conclude that support and resistance levels can last for up to 5 business days. Now let's clear things out here. I would need to leave. This is a different study, but I would need to read this in a little bit more detail than I have time here on the stream. But one of the things that I'm seeing in this already is that they were not proposing a trading strategy around it, only kind of suggesting that they do happen, right? And that doesn't necessarily contradict what I was saying. In fact, I've kind of said that there are levels that seem to act as support and resistance. All I'm saying is that trading them doesn't result in profits long term, right? That's my assertion. Support and resistance levels can exist, but trading them doesn't result in profits long term. Though trading them in the end just puts you in the noisiest spots, essentially. The noisiest spots with the high kurtosis. Yeah, I understand you weren't trying to contradict me. You want to, so while we're at it, but some people could find a new TA that works. Yes, they could. They totally could. I just want you to understand that the amount of effort involved in finding that is going to be excessive. It's going to be really hard to find. And you're probably going to need to use machine learning to find it at these days. Probably. My guess. And then gonna trade? Therefore, TA works well. Where do you think the market is going? Is this a dead cat bounce? Well, so we're in a really interesting area here in the S&P 500 because I think we kind of got two contradicting things going on right now. One thing is that we are getting some really strong flows, and we're getting some indications that there's still a lot of upside flow in the S&P 500 to come this month. And I think that we will probably continue to see that flow at least until the options expiration, if not the end of the month. Okay. But at the same time, the Federal Reserve coming out and saying, well, we're going to need to see multiple CPI prints declining in order for us to be convinced that we are in the clear in terms of what do we say? To say that inflation has peaked, we're going to need to see multiple data points, and we're going to hold fast to that. And I think that the Federal Reserve doing that has kind of put a cap on the market. I'm going to say that cap, I'm just guessing, is probably somewhere around 4,300. Okay. So let's just say theoretically Federal Reserve has put a cap around 4,300 on the stock market because of continued interest rate rises, right? So I think that what you could see is continued buying throughout the month of August, and a turn back down in September. I don't know if that turn back down in September is going to be like a disaster. Michael Burry is like, oh, this is just going to end like a disaster. But the problem is he's using fundamental analysis, and there's some problems with I think some of the things that he's been saying have not worked very well in the last 10 years, right? But I think that we could see some struggles in September on October, although nothing too terrible, and then maybe eventually recover once we get into, oh, okay, interest rates are at 2.75 or 3, and that's just fine. And we can just leave them here for a really long time. He's pretty much always right, just really, I don't know about that. I've too small of a sample size, right? I feel that some of the predictions that he makes seem too dogmatic to me. You know what I mean? Like he has these ideas about the way that the market works, and he holds those out as like incontrovertible truths, and they're not really like proven. And yeah, he made money, but I mean, he's been, for instance, he kept going short Tesla and lost tons of money on Tesla, right? And if you take the order flow approach to markets, then you could come in and you could say, yeah, that's a dumb trade, because we're seeing a retail mania and Tesla is the most popular stock. So everybody's going to put their money into that. It was a bad short. And the thing is that he's kind of making these big predictions that I really don't feel like that anybody really has the ability to make predictions of that size with reliability and timely manner. You know? I understand why people would be bearish. Like, I mean, it's difficult levels to buy into, but I see a lot of people saying, oh yeah, we should totally go short the markets here. And I don't think that that's a very good idea. I think that if I was managing a large portfolio, that I would be tactically long. I would be tactically long with a lot of cash, waiting to buy up other undervalued assets in September, October. Which is to say that I don't think that we're about to go into a Great Depression, 80% stock decline sort of a thing like Michael Berry does. Although I do think we could see sell flows in September, October. But not August. It looks like August that the flows are likely to be long. That could change really quickly. But when that stuff changes, it changes very quickly. But right now, the data that we have suggests more longs. Maybe 2 years from now that you think that we'll have like a I don't know. The thing that's weird is all of these people saying, okay, because we raised interest rates here, that means that we're going to have a recession in 2023 and all this sort of stuff. And I'm like, how does that tell you that? I don't think it works like that. Maybe when Ivanka is president, as predicted by this. I think no. I'm pretty sure that Ivanka has been completely turned off of politics lately. Well, we've been sitting and chilling in this area for an awfully long time. It's about time that we could see another meta order, but so far it's not happening. Maybe that means that we're going to turn back down. But the whole trade that we had here was based on well, here's kind of a common price action setup, but I don't think that it's necessarily a good idea to trade it. So Am I undermining myself here by not believing in the trade? I'm trying to be as cautious and execute it as smart as I can here. Okay, so if it doesn't work, I really don't think it's because of me, but we'll see. Okay. One of the few that comes from money that seems to be smart. Yeah, but the thing that I see in politics over and over and over again is that people overestimate their ability to understand the world. I think that a trader turned president would probably make a better president in that particular regard, at least, because a good trader essentially will come to understand that the reason we have a market is because the world is so complex that no single entity can figure it out and manage it all. And so that's why we create a market, a way that we can all get together and, come to an agreement on a price. The world is just too complicated, right? And I see a lot of politicians, and the way that they come in is that they say, well, I know I'm rich and not, so I understand the way that the world works, and so I can be an effective president. And then they become president, and what do they realize? That the world is a lot more complicated than it seems, and that things are the way that they are for very good reasons, and that it's very hard to change them, right? And that's what happened with Donald Trump. Was he kind of learned, oh yeah, actually, like, the intelligence agencies and the FBI and everything kind of work a certain way, and pissing them off, it tends not to go very well for you, right? The world's more complicated than you maybe realize. So we haven't even talked about the big news overnight. Did you guys read the big news overnight about Trump, right? So the story from the Washington Post is that the reason the FBI were searching his mansion was because he had stolen nuclear secrets among the documents. They were looking for documents about nuclear secrets. I don't believe it. It just seems like too fantastical of a headline to be real. It reminds me of the whole Pissgate thing, right? Remember the hookers and the golden showers and everything? And I was like, that sounds made up. That sounds too silly, right? And the story is from the Washington Post, who has posted outright false stuff before, and has been given tips by people they put out, and then the tipsters later came out and said, oh, actually, that was wrong. We were wrong, right? That's happened before. So I don't believe the story. Now, here's the funny thing about it, is that the whole internet is like, well, then we need to see the subpoena, because then clearly it would have the information about the nuclear secrets. I bet you it's not going to be in. I can almost certainly bet with confidence that, like, the word nuclear is not going to be on the subpoena anywhere. Right? So that's going to come out, and people are going to move the goalposts. Here's what's going to happen. Is people will move the goalposts, and then we'll argue about it for like 9 months or the midterms or whatever. And then everybody will forget about it. And then later on, we'll find out, that it was not really what it was built. But by that point, everybody will have forgotten and won't care anymore. That's how it always works. Do you already have a prediction for who wins? For who wins what? Who's your favorite DJ above and beyond? DJs, plural, I guess. So I was just thinking, I was gonna say something and I forgot a little bit further back, but when we were going through the research study, since you gave me a research study to look at, I'll give you a good one to look at. Okay, the study is called "Volatility is mostly path dependent." Volatility is mostly path dependent. I think it's an important study. Any thoughts on Robert Vallon? He's on Twitter and runs. I've never heard of him before. Do you think a DOM is useful for fast markets like the NQ? I think that it is. I think that the current liquidity conditions are always relevant for all instruments. It's just that the more slippery a market is, the more difficult it is to read, right? So I think that you can develop that kind of read and edge for NQ. As just, I haven't put in that work, and I think that it would be really hard to do. more generally, I really don't think that NQ is a good instrument to trade for retail traders. I think that retail traders want to trade it because it has the most potential profits, but along with that, it also has the most potential losses. So really what that means is to trade it, you're going to need more money, right? I think you're better off going for a low volatility instrument that you can just trade consistently with a small amount and get good at, right? Robert P. Balan. Well, what interests you about him? Like the thing with people is like, I don't know. I feel like that when people ask me about people, that they're asking me to like endorse their methods or their view of the world or something like that. And you know, I never want to put myself in the position where I'm endorsing somebody else's view of the world. You know what I mean? But more specifically, I think that we should be endorsing ideas, not people, you know, because people will always disappoint you. Will always disappoint you. Every time that I come in and I started holding somebody in really high regard, especially in the area of trading, and I was like, oh yeah, this person, they do something to disappoint me every freaking time, man. A lot of that is just the nature of trading. So really good fun. I mean, give the fact that I don't know who he is, probably, and that he has made a lot of money, probably means that he is pretty good, right? Seems to be kind of fundamental, yeah. I think watching the market, this is a key thing. I don't know how to fit this all in. Like, one of the problems I have with the content on my channel is like there's one idea that's really the most important, and that is that the markets are more statistically efficient than they are informationally efficient, right? But then if you want to actually come in and trade, and I think the way that things work is you duplicate the person that you respect and then you turn it into your own, right? So I would expect somebody to come in here, and I wouldn't necessarily want them to like follow my trades per se. But what you want to do is you want to come in and go, okay, well, Seth is saying that we've got this factor going on today. And hopefully you want to get to the point where you know that flow is going to be a factor before I say something about it, right? That's what your goal should be if you're trying to follow me, right? And then eventually you move on and you make it your own, right? But in order for me to teach somebody all of that, for them to be able to try and duplicate what I do, is like really, really hard to accomplish. I'm going to cancel this last one. Do you prefer to trade? So, Lambrecht, the last video that I put up, which is about trading micro treasury futures, I give 5 reasons why I like to trade them. But it's more than just the lower volatility, lower risk. Although that is like one of the primary reasons. But I also think that there are things about the treasuries that provide specific advantages to retail traders. So. Made 50 million yesterday, a record for them. In the treasuries? Really? Do you have a story about that? You can post links in here, just not with, like, you just have to remove the periods. Or put spaces around the periods. I forget what the best way to do it is. And equities. Okay. That's a little weird if it was just yesterday, because yesterday was a kind of a weird day in equities. Right? And they're pushing the highs again. It looks like they're making the move. Now this might be them trying to front run the consumer expectations. Maybe they think that the consumer inflation expectations is going to be lower than forecast. If it does, I could definitely see the Treasuries selling here. Trump pushes back on report that the FBI sought nuclear weapons from the Hill. Trump said on his social media platform Truth Social on Friday that the nuclear weapons issue is a hoax, as were other investigations into him. The Washington Post reported that sources familiar with the investigation confirmed the FBI was seeking documents containing information on nuclear weapons, but did not say if any of those documents were recovered. Well, I think that this trade is maybe going to work out, although it took a lot longer than I thought it would. I am seeing some polling here now. 1 minute. So 1 year inflation prelim 5.1, 5 year 2.8. Those are the numbers that we're listening for. Still waiting on the inflation numbers. Yeah, that was the University of Michigan report. Oh, now that's interesting. Okay, so 1 year inflation expectations preliminary is lower than anticipated at 5% versus 5.1%, and 5 year inflation preliminary was higher than expected at 3% versus 2.8%. So I don't think that that isn't big enough of a change to give me a trade. I did tepidly put an order out there in the 2 year to put some liquidity in, but I decided against it in the end. So I know, it looks like somebody is really pushing it up though. Look at that. The Treasuries did sell on that because the headline expectations was higher than anticipated at 54.9 versus an expected 48.5. So the actual consumer sentiment is much better than anticipated. So I primarily get my news, like that kind of news, from the News Squawk Financial Juice Pro. It's about $100 a month. I have an affiliate link in the video description below. I highly recommend if you're going to trade that you get a news squawk, and Financial Juice is the most affordable news squawk, and they do a great job. So I don't think that the inflation numbers really mean too much, but that University of Michigan conditions and expectations number, well, not the conditions, but just the expectation numbers in general could be enough to push the treasuries down considerably, right? So in this one trade that I got here on Sim, I'm just gonna bail. And then the 2-year, you can see them fighting here. I'm gonna... Wouldn't that push equities as well? It certainly would. But it looks like at the moment that the equities care more about the... I mean, because normally high consumer expectations would be generally a good thing right now, right? But if that means higher interest rates, the equity markets don't like that. So the equity markets are selling off a little bit. It's not super big yet. Uh-oh, Fed's Barkin is speaking on CNBC, guys. Oh boy. So they just pulled their offers. They're moving lower here. I hate that. Barkin says there is more room to make rates more restrictive. Well, the 2-year is not cooperating with me at the moment. Where's my quote? Oh, it must be hiding behind this. Yes. A big offer there in the 10-year. Oh, they traded him, huh? I'm not quite sure what to make of that. We've seen some large trades in this kind of prices before. That was at the top of the hour, right? Michigan, University of Michigan 5-year inflation expectations preliminary. 3% versus an expected 2.8. Again, those numbers were not far enough away from the estimates to really, I think, matter. The Michigan expectations number being 54.9, a positive number, much higher than expectations. That is a measurably thing. Fed's Barkin says, I look at real rates and I want them to be positive. So Barkin is speaking very hawkishly at the moment. Oh, 6.5 was the high. Okay. Yes, he is on CNBC right now. There's definitely some big players at work here in the 10-year. Uzi thinks that's because that was the high from the CPI release date. Could be. What we're getting, it's kind of interesting. What we're getting from Barkin right here is a little bit more of the same from what we got from the other Fed speakers. He's not having nearly as strong of an effect on the market as the others did. But that may be because they're still kind of recovering from the consumer sentiment numbers. So you just got a big sell, and now you got something else that's coming in and being a big sell. Because of that, the impact of that sell isn't going to be as strong. The second sell isn't going to be as strong because there's already a lack of buy liquid, limit buy orders to execute against. On the other hand, there was some big trades down in there, so... Well, I mean, if 06.5 is a key level like that, and with all of that volume trading there, if the flows continue here and we move down, it could end up being a relatively significant move. So far, though, not going so well. Okay, some significant downticks there. There's a large offer placed on the 10-year again. Seems to be following it down. Jake, you heading out? All right. Well, thanks for stopping by. Are they going to trade into this big order again? No. Well, 1,000 of it. Okay, it wasn't 2,500, but it was a decent amount of it. It was always about 500 that pull. They traded through it. I mean, it wasn't a spoof. So Trading Floor Audio tweeting their synopsis. Fed's bargain inflation data this week is welcome. Would like to see a period of sustained inflation under control. There's more to come to get rates into restrictive territory. The U.S. economy is fundamentally sound. Where are you getting that a break lower would imply the market sees a higher than 9.1% inflation? Where number one, where are you getting the 9.1% number from? And number two, are you getting the impression that the price of the treasuries reflects what they think that the inflation is going to be? I think that the interest rate on the treasuries, I didn't make a claim. Yeah. No, I want to know where you got that from, though. Where'd you get that number from? You didn't just pull that number out of thin air. But to the question, I think that the price of the treasuries reflects primarily what they think the Federal Reserve is going to set interest rates to. Oh, okay. 9.1 was the CPI release from 7/13. No, I don't think it's that. In fact, I think that what's going on here is I think that the market thinks that inflation is going to remain somewhat low. think that the market thinks that inflation is going to remain somewhat low, but that the Federal Reserve is going to continue raising interest rates, possibly up to 3.5. Right. Parkin still speaking. Well, somebody took a big order there at 08 and is getting burned hard right now, man. Of course, it's really slippery, so this move up could just be a reflection of, you know, trying to rebalance after a large liquidity being created by the, what did we say? The Michigan numbers. I mean, the market did react to when he was talking, but not very strongly. By the way, I'm seeing things flatten again. No, like a few ticks down, but not. And that swing to the bottom to where we are is 16 ticks. What are we seeing meanwhile? Well, oil is hurting today. Japanese yen ranging, well, similar to the treasuries. 2-year trying to push down, it seems. 5-year trying to push down. Maybe dragging the 10-year with them. Seems like it's fighting him. Big order was at 08, right? Liquidity in the 2 years still a little iffy. Taking it at 10 half, taking it at 10 quarter, taking it at 10, taking it at 0.97. 10-year really lagging the 5, but eventually getting dragged down 2 ticks. Man, the 5-year took that. They really took that, didn't they? They're fighting it, but that flow in the 5-year is starting to become quite aggressive, isn't it? And the 30-year is starting to go too. The 10-year is actually lagging. Okay, now I have to reset things. Nope. So I need to come here, look at the volume profile. Oh yeah, we're not even not even close to overnight lows. So 04 is kind of in the area that they've had a hard time getting through though. So maybe some support there. Looks like another, not nearly as large, but some, well, okay, I guess not. There was a little bit of a large order there at 07.5, but they pulled. Are we getting some steepening now? Well, we need to see them sorted out. I'm getting a hint of a steepener here now. Is he done? I haven't heard anything from him in about 3 minutes. I have no difficulty decreasing the balance sheet while raising rates. It's the last thing I saw from him. Okay, that downtick seemed significant, but not much follow through. When I say like a tick seems significant, it's because they all tick down at the same time. There was good volume on it, and then the next price over up or down also pulled. So that one seemed significant, but no follow through, tick back up. I think that regardless of what ends up happening from here in the Treasury, whether we go down to the lows or we rebalance and move back up higher, it ends up being a pretty topsy-turvy day in the Treasuries, doesn't it? I mean, I think that the flows suggest that we should go lower. We'll see if they come through. Yeah. The moment it's kind of giving me that we're in a hole. See, like the bids seem soft here at 06, but okay, 800 by 800. This is soft through this area between 06 and 08, but I have yet to see strong flows come through into the 05s area. Right. It is, the curve is sorting itself out a little bit though. We do seem to be getting the bear steepener again. pile of mush. Yeah, the 05 half 339, right? Like it's ticking, but they're like really soft ones. I am seeing the Japanese yen fall here, so. She's breaking the water gauge at Kabub, a choke point in the Rhine River in Germany, has now dropped to 39 centimeters below the level typically seen as the minimum for most barges. You know what that means, right? That means more supply disruptions. Anything being made in Germany is going to have problems. Okay, there was, yeah, okay, another large order just added at 06, right on the offer. That is pretty bold pressure there. That's like, yeah, if you want to buy into me, I'll be more than happy to take it. That's what that is. Or that's how I read it, at least this situation. I think that might, let's see if they tick down if it follows. Could be, well, I don't think, okay, let me start over again. They put it right on the offer in a situation where they very easily could have been executed. So I think that the placement of that means it's more likely to be a real order. But we'll see if they trade it. I'm interested to see if we tick down to the lows again at 04 if that order follows. See, look, he's not, they could hit him right now. He's not pulling it. In fact, the few orders did hit him and he didn't pull it. Like, that's going to trade. There you go. Collision. And actually more added on the offer. It wasn't a spoof. Whether that means up or down from now, I can't say, but it's a spoof. It's not a spoof. But my take, I guess I don't really have anything to tell me that that's for sure what it is, but my take is somebody wants to sell it and they're trying to pressure it down and they're saying, yeah, I'm totally willing to take 2,500 contracts if they're really that eager to buy into me. ES looks to be going down. Well, they could, if the treasuries start breaking the lows, you could definitely start to see some spillover into equities, wouldn't you? Five-year actually ticking up there. So I'm seeing more spreading going on. Ooh, okay. Ooh, okay. The offers in the 2-year haven't changed yet, which is kind of funny. I kind of feel bad for the guy who bought 1,000 yeah, right? Is he gonna have to dump now into the lows? Well, I think you gotta trade below 04 a little bit first before people freak out, right? There you go. 03 half, new low. Not too much panic yet. I was kind of hoping to see somebody puke there, right? Well, we got 119 below us. Absolute overnight low. Well, next pivot is 01 half, and then absolute low of the day was 30 half. So okay, so I didn't see like any kind of really clear stop run kind of behavior when they broke those lows, and now they're coming back above it. So that kind of maybe makes me think that the sellers didn't get what they wanted out of that. Doesn't mean that it won't go lower, but looks like a temporary pullback. more generally, I am seeing steepening. There was a little bit of flattening off of that initial news though, so it's unclear which way that will end up on the day. But at the moment, I am seeing flattening. Kind of keeping an eye on corn. I'm wondering if some of the commodities might start doing something here. Right now, one of the biggest movers, though, is oil. Although oil recently kind of turned here. Yeah, they're kind of chugging it along here, but it still looks relatively loose. Soft order, limit orders still. And in reality, the order flow in the Treasury has not, like the market orders in the Treasury have not been that. It's still relatively equal. I think that they might have been moving, like that latest move down especially might have been driven more by the 6J. Also seeing oil starting to turn down. I mean, yeah, like oil has been getting hammered all morning, but in the last 15 minutes, it's been turning back up. Tobias, how are you? Where you been? Working presentation? I gotcha. We've been getting some interesting action here in the Treasuries. We might be at the start of a really good trend, but I don't know. It looks like it's you know, we had, so what happened here was we had a pretty decent consumer sentiment numbers, and of course good news is bad. And then we had Fed's bargain come out. So I think that the Treasuries have good reasons to sell off, but at the moment they seem to be struggling with the impact of their orders. And I'm not actually seeing the order flow in the futures themselves. The market orders really come in that strongly. So I think that there's a possibility that we could see a more downside trend, but it's still really tepid to me, right? But we have seen, even though the cumulative delta has been largely flat, we have seen some big trades. And there was somebody put out a really big offer, somebody traded into them, and then we moved to new lows. That's why Uzi was saying you feel bad for the guy who bought 1,000 contracts there. It was like, yeah, somebody lost like $60,000 there. Hey, it came back up there. Well, I don't know. That was actually a big change. A lot of fighting in ES. Yeah, I don't like that at all. Scratch. So that move looks like news to me. I'm not hearing it though. was we had an okay trade there. It didn't work out. Man. Well, it just gets more and more interesting, doesn't it? I don't know, that kind of might be a warning for me to not, if I do take a trade, I don't think I'll take it in the 2-year again, because we might be getting too much volatility now to trade that one. We could try doing something in the 10-year. I'm not sure I want to do something until I know why that long order flow came in so strong. Was it somebody just could somebody just giving up on the trade cause that to happen? I don't know. I don't see anything on Twitter. I haven't seen any news hit Twitter for 3 minutes. Barkin did say some hawkish things, yes. Although what he said was largely in line with what the Fed speakers from earlier in the week said. I was messing around with fonts yesterday, and I think I screwed up kind of the columns in this 10-year. They're not quite the right sizes. This should be smaller and more room there. Yeah, so order liquidity still really soft. Even though they're putting like 1200s up there, it doesn't look like it takes very much to move it right now. Yeah, Lambrecht, I have a list actually. Here, let me find that. Where is that? Actually, here's what I would recommend you do is I have this super video. So I have the link to my Twitter what do we call it, list in the video description of this video here. And you can make a column out of it in TweetDeck is one of the ways that I look at this stuff. So that's what I would recommend doing. But that's the video that I made that like has all of the specifics about like trying to trade the news. Look at this. What the fuck? Well, that really, really makes me want to go long, but I am not going to touch it, okay? Would I be up on my 2-year trade now? Because I got 26. Yeah, I would be. That... Oh, I don't... That's gotta be news, but I don't see anything. We're gonna find it. Okay, wait. Russian oil flows through the Druzhba pipeline to the Czech Republic are to resume at 1800 hours Greenwich Mean Time today, Slovak pipeline operator Transpetrol says. Okay, is that what moved them off of that? I don't know, but look, these some big traders took orders down in here, man. Oh, I don't know about that. I'm definitely hands off now because I we want to trade when we're informed traders, and I am clearly not the one in the know here, right? It seems like there are guys on both sides of this that think that they know something, and I don't know. I thought I knew, but that one didn't come out. I only took I took a one take loss on it, so whatever. Fine. Could have gotten $10 on it, but for the 2 year, that's not very much. I'm thinking here, I'm wondering, well, you know, sometimes I say these sorts of things because I'm like, well, if I say these things, like it seems like I do have an effect on the micro treasury market. Like I am the largest influencer in the micro treasury market, which is really silly, but that's the way it is right now. And I think that there are a lot of good reasons to trade the 2 year versus the 10 year right now, just because some of the things that we're seeing are going to be more impactful on the short end of the curve. And when you're trading like the usual 2 year, because of the way that the prices are and everything like that, you don't make very much from it. But when you're doing the yields, that 2 year yield could potentially move more on some of these moves. So I think that not only that, but you get such wide spreads that you can put some limit orders out there, and in certain situations you can kind of get an advantage from the lack of liquidity over there. See, if I had held on right now, I would be able to mark it out at a profit. But I cannot explain that series of events. The way that this is moved, they could totally push lower. I think that either way that this goes is probably going to end up being big because there's just too many people took trades in here. Man, that move down was almost 10,000 contracts, by the way. It could just be two large traders fighting each other. See, like right there, the 275. Except for the only problem that I have is that we're about a basis point too high in the micro twos compared to where we were before. So I don't know if hitting into 275 there would work very well. But when there's just one lot sitting out there, right? Maybe this is a bad way to go about it, but it always kind of catches my interest when I see a situation there in the micros where there's one lot that I can kind of pick off. Okay, they're pushing back up. There's a large offer at 07.5. They trade it 1,000 trades. I tell you what, this is turning into some exciting trade, but I don't think this is very good trading for me. We had some fun though. We had some fun. I think people slowly are starting to realize that the Fed is not going to hold back. I think so. So I have to admit, Tobias, that when the Federal Reserve was speaking about it on Wednesday and stuff, I was way too slow to realize what was happening, because I could have made at least 75, if not $100 on that trade from Wednesday, and it came all the way back. I mean, I was doing other stuff. You know, sometimes that just happens with the swing trades. I think it's okay. Like, that's the best I can do. But yeah, it was my bad in that situation. I should have realized what was happening a lot faster. So then you saw a continuation from it yesterday for sure, and that went quite a bit further than I anticipated. But then I came in here this morning and I kind of started looking at it, and that's when I started to realize, like, oh, you know what? They could have another 30 basis points to go here. So yeah, there could be way more downside action. But the problem I have right now, because I would prefer to be in some sort of a short. I would prefer to be, I wouldn't mind still being long at 3.26. That's where I was long from in the, well, I had it right here, right? I put it right there. Like, come get me. Fill me back in again. Come on. Unlikely to happen. But this order flow is just so wild. Don't think I can. So it's also getting close to when I quit for the day anyways, right? You have some fun. I was trading. I don't know if I set this other chart up correctly, because I changed my spread indicator and that kind of changed some of the names of the properties and stuff. And so I don't know if I set my 2 and 10 year spread up correctly. It's 5 ZT and 2 ZN is what I've got over there. I don't think that's right. I don't think that's what it was. Because the chart just doesn't look right. I am a site reliability engineer. They have 2 to 1. Maybe it was more like 2 to 4 or something like that. I also kind of changed, in order to make it so you could have multiple legs, I kind of changed it so that you just have to put in a negative number. And, man, I need Akshay. What was the ratio that he recommended? Because the exchange listed one is 2 to 1. The tut. I see no edge today, stuck in the initial balance and stuck in yesterday's range chop between big players. Yeah, well, I think that your last part of your comment there, Octavius, is really key there. Like, we did have reasons to trade, right? And I think I actually played that part really well. If there's anything that I've gotten better at in the last year, and it's really the hardest thing, is knowing when to trade. And I've gotten so much better at just not taking as many trades and only taking trades when I had a really good reason to believe that I could predict the order flow. So I think that the combination of Barkin and the consumer expectation numbers and the larger downtrend that we've been having in the treasuries as the Federal Reserve kind of suggests that they're going to continue raising rates for longer than the market wants. Those are all good reasons to take a trade. But the order flow does not seem to support our thesis. The order flow seems to suggest that there are players going both directions here, which I did not expect. And yes, when it's chopped between 2 big players, the little guy usually gets screwed in that action. So probably better for me to stay out and force these big players to have to fight with each other for the liquidity instead. Right? or to have to trade into each other instead of trading into us. It's like, look, there's Goldman Sachs, JP Morgan. You can trade with each other. You don't need me. You don't need me. There's another big guy here. Oh, really? Balin, I think you like Balin. He's pretty much what? So does he have like social media or stuff like that? What did he... Oh, that was the only reason you brought him up. What was his first name again? Because I didn't really... I forgot to like make a tab with the search for him. Let's see here. We'll come back up here. Find when you were talking about it. Oh, you also talked about Delornia pivots. That was another weird one I'd never heard before. That's not like I would want to trade that, but oh, Robert P. Balin on Twitter. #1 trading unit at Seeking Alpha, PAM trade switch, HF funds. Yep, Switzerland. That's the guy. Oh, you even gave it. Yeah, that is his Twitter name. Okay. Go back and look through it. See, like right now, I would be looking to be long 26. I would be right where I started at. So. Oh, really? What would it show me on there? Or are you saying I would have to seek searches fun? So one of the things with that, if I can bring this over here, just as long as I don't show you any actual data, there's this messenger part, right? But no matter what I do with that, it says that it's wrong. So I don't think I can use certain social parts of it, I guess. Where would you go to search the directory? I can remember app library. Top left corner drop down. And then where from there? Is there an app called directory? Directory? No. You must be talking about this drop down. There is an app. What is the app called? Search tools. Called directory, huh? I go to app library. All categories. Maybe I needed to do it like that. Direct. Now it shows up. Okay. Open. People. Well, it shows me people, but it doesn't seem to be letting me filter the results. See here again. Signed in as unknown user. Yeah, so if I type Balan, like nothing happens. Like that. I hit enter. Oh wait, I hit enter, it's doing it. Robert Balan, enter. Aha. Which one is it? Robert E. Balan models. There we go. That's him right there, right? Switzerland. And look, he's got an email. I shouldn't show you that. You didn't see that. His email. Add Robert as a contact. What am I supposed to be doing here exactly with this? You want me to email him? Oh, okay. Well, I'll look at. He's on Twitter. I'll look him up on Twitter. Hey, wait. Can we see? Oh, what was the guy's name? Bad Guy 12, Joseph Wang. Will he show up? Shows me 5. But I don't know if any of them are actually him. I feel like what you talk about, he likes to talk about too. Cool. Oh, this guy is a Refinitiv developer. Bank of America, Sinopec. I was gonna say probably not him. I don't think that any of these are Fed guy, unfortunately. Darn. Well. I'm a little torn on the icon thing because I get it both ways. Like, I don't turn it on every day because I do find these numbers useful to some extent, but it seems like I have to add a basis difference on here. So like right now, 2-year note is saying 3.25 and they're doing 3.265. So there is a basis difference, but also somebody puts a limit order there. Good deal. No, I think if you go in and you got like, because there tends to be a basis difference. So like if the current bid on the trade web is 3.25, you should be able to put a limit order there and be okay, generally speaking. Of course it moves, but not, I haven't actually looked at it for the news headlines. Let's, yeah, I probably should though, huh? Or maybe I should. I don't know. Like the issue I've had with it, Jacob, is that I just don't feel like the app itself is built that well. You know what I mean? Like, I think that if I built an app that did the same thing, mine would be a lot more responsive and stuff. What they've got is kind of bulky and slow and it's kind of weird. Yeah, I'm not the biggest fan. Having Reuters top news is a good one. So which one should I do? The breaking news one? Breaking news. I feel that Twitter is better for headlines. The Joe Biden COVID case was late by 10 minutes. Twitter was faster. Yeah, I have to say I've never found a news source that was like absolutely perfect on everything, right? But what I often find, like here, when we got these big flows up and down, right? I really, that really looked like a news-driven move to me. I think that we haven't gotten any headlines, and they continue to fight in here. Kind of makes me think, okay, there must be just two really large traders taking opposite sides of this trade, I guess. But I didn't see any news. And the thing is like, I know that eventually it's going to come out on Twitter, but like oftentimes when it's news like that, it's like 5 minutes late. And if it's something Treasury specific, then, you might not figure it out until the end of the day. So like, when the Treasuries were moving down on the Federal Reserve comments on Wednesday, even on Zero Hedge's night synopsis, they didn't really mention it very much. Was really overlooked by a lot of people. Confusion. Yeah. Man, I can't remember what the correct spread ratio was now. I wish I could remember. I bet I might be able to open up another workspace. Hey, what is in those workspace files anyways? Oh, well, I gotta get going. So, I don't know. Got a video planned, so hopefully we get that done this weekend. I think that we'll continue to see some trade next week. Although, remember, the next big thing that we got on our calendar is options expiration on the 19th. So I have that. What else? Let's just really quickly here, because I want to give you guys a little bit of a head up. I should probably post something on Sunday. Hopefully I'll remember this time, like a weekly synopsis. We do have core retail sales building permits. So Philly Fed Manufacturing Index, a little lighter on the news, but we could still see some flows. So, and it's definitely going to be, like this sort of a thing. So remember, I was saying, I don't know if I'm going to take a trade today, but we definitely want to pay attention. So what did we get? There are two sides to this trade for sure. So see you next week. In the meantime, stay profitable, friends. Or at least don't lose it.